Hello, welcome to the European Open briefing for Wednesday, July the 5th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we do have a bit of a risk aversion this morning. That's mainly due to rising tensions in North Korea. We had North Korea firing another missile test yesterday, and the US has confirmed that that missile is capable of being a long-range one, potentially could hit US soil. So we are seeing increased demand for safe havens such as gold and yen this morning, although it was that risk off was a bit stronger earlier in the day during Asian trading. We are seeing some recovery in risk appetite at the European Open. The main movers, we've got the Canadian dollar near 10 months highs. We had more hawkish remarks by the Bank of Canada Governor Stephen Poloz, and we also have the pound coming under pressure, mainly due to weak PMI readings for the UK. The euro, on the other hand, although we are seeing positive PMIs for the eurozone, the euro is struggling to regain its momentum. And in other currencies, the Aussie is doing a little bit better this morning, following yesterday's sharp falls, while the Kiwi is down against the US dollar because of a drop in dairy prices at yesterday's auction. So let's have a closer look now at the US dollar. We can see that it's pretty much been range bound since on Monday. It's been trading around the 113 level since it increased sharply on the back of the stronger than expected ISM manufacturing PMI late on Monday. So the focus now is on the FOMC minutes, which are due later today, as well as the non-farm payrolls report for June. That's due to be released on Friday. The dollar index, that's also fairly steady, currently trading around 96.20. And following that ISM data on Monday, we are seeing slightly increased odds of the Fed raising rates for a third time this year. They currently stand at just above 50% for a rate hike by the end of the year in December. So the Fed's minutes should potentially shed more light as to whether or not some policymakers within the FOMC still have some concerns about the strength of US growth. Let's move on to gold now, because gold, we can see here, had fallen to 7.5-week lows of $1,218 on Monday after that after we saw the dollar surging on the back of the ISM data. We're seeing gold steadily recover, benefiting from that risk aversion from reports that North Korea has fired a long-range missile, which actually hit the waters of Japan. We do have the G20 summit on Friday and Saturday in Germany, so we'll probably be hearing more about North Korea and what actions they potentially could be taking, though most likely we won't see any fresh action apart from the US putting pressure on China. But despite this latest escalation, there is generally calm in the markets, as investors are pretty much used to the news now on a regular basis that North Korea has fired another missile test. Let's move on to the Canadian dollar. We can see here that USD CAD dropped to a 10-month low, 1.2910 yesterday. This came after the Bank of Canada Governor Stephen Poloz said that inflation in Canada is expected to be well into an uptrend by the first half of 2018, and the bank should therefore begin policy normalization before inflation has hit its target, and this basically follows up on what we heard in the past couple of weeks, where previously Paulo said that rate cuts in Canada have done their job, and so we are seeing increased bets that the Bank of Canada could actually start raising rates as early as next week, when it has its latest policy meeting on July the 12th. Also supporting the loonie are higher oil prices, although the 8-day rally has stalled for the time being, and the reason for that is because we had data out of OPEC showing that OPEC exports actually rose in June, which were above May's level and also above last June 2016 levels. So for now, it doesn't seem to be the OPEC cuts don't seem to be having the desired effect. Let's move on to the euro and pound now. We can see the euro has rebounded a little bit since yesterday's lows, currently trading around 1.1350. We are seeing positive PMI readings for the Eurozone, but for now the euro seems to be consolidating its recent sharp gains. We did have some dovish comments by the ECB's chief economist Peter Praet yesterday, who said that the current accommodative stance is actually crucial for inflation to recover. So that pretty much says that it's going to be suggests that it's going to be a slow progress in terms of the ECB tightening policies, as they're not going to be in a big rush to quickly tighten policy. The pound, though, is under pressure because, unlike the Eurozone, UK PMIs have been rather weak. Although they are showing expansion, they are down on the previous months, both manufacturing and construction PMIs, and also below expectations. We've got services PMIs due out very shortly in the UK. We had the Bank of England MPC member Michael Saunders yesterday warning that UK households should prepare for an interest rate increases at some point. Although Michael Saunders is a known hawk, he did actually vote for a rate hike at the last meeting. The pound is at the moment struggling to hold on to the 1.29 level against the dollar. Quick look at the Aussie and the Kiwi now, because the Aussie in the chart here, it's in yellow, has recovered somewhat from yesterday's lows. It came under pressure yesterday, the Aussie, because the RBA, although they held monetary policy unchanged as expected, and they also maintained their neutral stance, they was a little bit less confident about the growth outlook for the Australian economy, so that did weigh on the Aussie. Although this morning we did have strong services PMI out of Australia. The AIG services PMI rose sharply from the prior month in June, helping supporting the Australian dollar against the greenback. The Kiwi, on the other hand, is down this morning, mainly due to a drop in dairy prices. We had the bi-weekly global dairy auction yesterday, where we saw prices falling by 0.4%. That's the second time in a row that dairy prices have fallen. So we're seeing the Kiwi struggling at the moment around 0.7270. And looking at today's economic calendar, we can see the services PMI data already being released. We've got the UK ones coming out shortly. We're also going to have retail sales out of the Eurozone and factory orders out of the US. We also had the cash in services PMI out of China, which actually fell in June in contrast to the manufacturing PMI. But the main focus later will be the FOMC minutes, which are due at 18 hours GMT. That's it from me. Thank you very much for watching, and have a great day.